Birmingham is home.
Well, it's got to be inverse. Oh, yeah. Inverse, yeah. Yeah.
All right.
Birmingham is home and what?
And so the original bank was in Red Level, which is Lower Alabama. The new name, new headquarters for all 13 of us is in Tuscaloosa, Alabama. And then this little office is our first LPO that we are standing up in Birmingham.
I'll be in Birmingham in about a week and a half.
I will see you. In fact, Michael is a panelist with Chris McClendon from Ellie Mae, and I'm at the past presidents. I'm the old guy that they put out to the back 40. So I'll be there.
And you guys, I wrote about it in my commentary, but you just had a past leader pass away.
Say again, Rob?
You just had the organization just had a past leader pass away.
Oh, yes. Yeah. John Johnson.
Right.
Yep. Yep. Are we live or are we ad libbing prior to?
We're totally live. We're letting everybody kind of get in and
Cool.
and get settled. I have to ask you about your sign behind you first, and we'll let everybody get in and join us over the next couple of minutes while you tell me. I can't read it. What does it say?
So let me comment on Rob's comment, and then I'll come back to that. So Rob, John Johnson's great guy. Native to Birmingham, stood up Mortgage America probably when I was 15 years old, and ran a fantastic company. Like a lot of things, 2008 was tough to a lot of us, but great leader, great mortgage guy, and he will be missed. Melissa. So that sign, I guess the video is inverse here for us so that I don't tilt my head and keep tilting it, right?
You put it on Michael's shoulder if you like.
So find the fun. So the origin behind that is, a year or so ago when I was in between, left First Bank and was in between and started this little venture here in this little local bank. There are plenty of opportunities in this industry to find frustration, find problems, find issues, find roadblocks, find speed bumps. And every day I'm talking to friends and peers and competitors and hearing that. And I, one day Susan, my ops manager, processor, shipper, closer, when you're a small shop, you do a little bit of everything. One day she was talking about just being, finding frustration with this. And I said, we need to pivot that, and we need to find the fun. If the mortgage business isn't robust and we're not all being paid well and we're all just hanging on and we're trying to right size our organizations, we're trying to help our customers, let's change that dialogue and let's work towards finding the fun. And human nature is when people are enjoying what they're doing, when they're finding creativity, finding help, finding assistance, they're having fun. And when they're having fun, the business runs. So there's that, which I'll use that segue to kind of say, on my right and left, neither of these guys work for local bank. We're here to talk about local bank, but not really here to talk about local bank. We're talking about the industry. Lee and I worked, is it 21 years?
21 years. Yep.
So you tell them where we met.
We were actually at South Trust Mortgage together back in, South Trust Mortgage under the umbrella of South Trust Bank, 2002, 3, 4. And then we started our company in 2005. And then when Wachovia bought out South Trust, Rob started a little mortgage company in Birmingham he bought a company called Rast Mortgage. He called me and he said, "Hey, I need somebody to come run it, and I can't afford anybody good. What do you think?" So that's how our relationship started together. We ran Henger Rast Mortgage until 2011, and then partnered with First Bank. First Bank bought us out 2011, and the rest is history.
Yeah. And then 2022, the nice folks at First Bank were kind enough to give me a little early retirement as they needed good leadership to stay on and run the organization. And Lee is there today, so he's doing a great job at First Bank. And then here on my right, Michael McKay. I'll tell the funny story on Michael McKay. So Michael is a brilliant young guy. When we interviewed him, Lee and I interviewed him 19 years ago, 19 or 20 years ago. We meet, and we're at our office had a little bar, a little restaurant below it. So we go down and we have an interview at the bar, and we're really impressed with him. And we walk out the door, and Michael says to me, he says, "Damn, it's a good thing they didn't card me." And that's when I realized he's 20 years old. And now, now he is a good husband, a good father, and a good mortgage banker. So I'm happy to have spent the last 20 years of my career with Michael and with Lee.
Rob's confession of contributing towards the delinquency of minors.
Amen to that.
By the way, I was 22. I was 22.
Okay.
I'm 22 now.
I feel better. All right, well, we're going to go ahead and get things kicked off officially, as most everybody has joined us at this point. Happy Friday, everybody. If we have not met yet, I'm Melissa Langdale. I'm the president and COO of the Mortgage Collaborative, and we are super excited that you have joined us today. As always, I am joined by Rob Chrisman, and today we actually have not only our guest, but a couple of surprise guests with us as well, and I'm super excited about our conversation. For those of you that do not know Rob Henger, he is the president of mortgage banking at Local Bank, and he is joined, as he just mentioned, by Lee Townsend of First Bank and Michael McKay at Metal Beard Technology. And so we're going to have some good conversations around the industry this afternoon, but why don't we start with a little bit of an overview of Local Bank? I think your story, Rob, is so fun and unique to hear that I'd love to have you share it with everybody.
Sure, I'm happy to. Guys, I've been at this 30 years. The earlier part of my career was in the IMB space, and then I sold to a bank, 15 years ago-ish, and enjoyed a career with a mid-sized community bank that became a large publicly traded CFPB regulated, institution. And I had the opportunity to exit there in 2022. And a friend of mine called me and said, "Hey, it was like this. Hey, dude, we just put some money together and we bought the smallest bank in the state of Alabama." And that's kind of how it started. There's a group of about 15 or 20 of us, and there was a really cool little story. It was called People's Bank of Red Level. This town, in the early 1900s, it was a real town. Unfortunately, today it has a population of 400 people, so it's really, really small. And you had one family, 3 generations, that owned this little bank, and they took care of the little community in the county they were in. And as life happens, the last generation, the third generation, his children didn't want to run it. So they put it up for sale, and we acquired it about a year and a half ago. And that was People's Bank of Red Level. And if you ever want to, have a walk down memory lane, Google that and go down memory, go down Main Street of Red Level. It's pretty sad what can happen to a little town. We weren't even big enough for Walmart to take us over. The Dollar General put the little town out of business. But anyways, we moved the headquarters, I use that term loosely, to Tuscaloosa, Alabama. So roll Tide for those of us that Alabama fans. And today, I think we have a whopping 35 employees in the whole bank. Everybody is cross-training to do a little bit of everything. And this 117-year-old bank never in its history never made a mortgage other than just a 10 or 20-year term to somebody locally for some land. And we started, myself, my daughter, Susan, there's about 3 or 4 of us in March of last year. And just from ground zero. So it's kind of fun after 30 years in business, starting over. Happy to say, I think if Susan's in the other room, we just submitted our last loan for FHA test cases. So we should hopefully, God willing, HUD will give us our full legal and we'll check that box. Freddie Mac, if you're out there, Tom, I'll hopefully come see you here shortly and we'll start selling directly.
I love it. I love it. Well, Michael McCauley, you actually have or Michael McKay, sorry, you actually have a fantastic story as well. I was asking you a little bit about the name of your company, Metalbeard Technology. So I would love to have you kind of tell everybody a little bit about that name.
Sure. I, for one, am a huge fan of old school heavy metal. I love it's my thing. It's my thing. And I also have an amazing beard. So it's dude, this does not happen magically. I have to blow dry it and straighten it and so on. And I combined the two to make Metalbeard Technologies. And there was a character in the Lego movie that was a pirate that had a metal beard that my son loved when he was a kid. So that's where the name came from, Metalbeard Technologies. I was very fortunate that when I first started entertaining the idea of starting my own company, which I did 4 months ago. I met someone who had an amazing company name. And I was like, how did you decide to name your company? The company I'm talking about is Viking Sasquatch. And when I met him, I was like, how did you decide to do that? He's like, because it's awesome and because people remember it. And I don't have to worry about gimmicks or marketing materials when they remember you, because one, you have a memorable name, and two, that gives you a place to start, a place to talk to people, a place to explain your story and what you do, and it allows you to become relatable. And I thought that was great advice, so I took it and ran with it.
I love it. I love it. All right. So, Rob, I'll jump back over to you a little bit because, obviously building a mortgage platform from the ground up, in this market, there's a lot of people that would look and say, oh my gosh, that's crazy. What are you doing? And it's got to be so challenging, but really you don't have any trailing baggage right now, right? There's a lot of flexibility that I think you have. So are there things that you're doing today that you feel like are really going to be able to set you apart in the future as you grow?
Listen, I'll try to cover that two ways. So one, when you're standing up a mortgage manufacturing shop at this day and age, it is finding good people from a manufacturing operation standpoint is not necessarily a challenge. There are a lot of good people that are looking for opportunities. I think the advantage to that is as you're building that infrastructure, bringing people in with the understanding that the compensation is going to be highly variable, right? I mean, we're in the ups and downs business. And unfortunately, if you think about 2020, 2021, 2022, Lee, I mean, we were killing ourselves to hire people and we were paying top dollar to bring them in. And unfortunately, as this industry, as it happens, what goes up goes down, what goes down comes back up. So when you're in that trough, we're blessed to bring in really good talent from the operations standpoint, and you join hands and you link together on a variable comp model, right? So that's kind of where we are from an operations standpoint. The challenge is the production side. How many folks are surviving this market, and then there's fierce competition to hire good people. So that's probably the biggest challenge in standing up a mortgage manufacturing shop in this day and age. Now the positive to it is your expectations are real high, right? So you could, you're not killing yourself. At least in my world, I'm not going out and raising capital. I'm not going out and raising equity. I'm not, if you were truly standing up a venture capital backed entity, it would be really hard. Yeah. So I think it's a good time to do it. One of the things, we were talking about earlier is there's 16 years, 18 years worth of rules and guidelines and procedures in our old instance of Encompass, right? I mean, 16 years ago, we were just like this, we could get a six-pack and pizza and say, how does Encompass work? And start figuring that out. And it was a lot of fun, but it does create, you used the word baggage. I'm gonna there's two things there, right? One, you have legacy structures, right? You have processes and procedures that you put in place in 2005 and 7 and 12 and 17, all different eras in this business. And it's hard to bring those down, right? People stay in that way. And the other thing is, as a fresh start, I don't have buybacks. I don't have compliance concerns and issues, right? Compliance is important, but I don't have boomerangs coming back and hitting me in the head. So that's one of the benefits of starting over. Now, it's not easy. So that's, I think sometimes if you think about what we did 15 years ago, or almost 20 years ago, yeah, as time goes on, the stories get more glorious, the stories get more fun and better. But when you're in it every day, it's hard work. So that's a good way to answer it.
Yep. I have been there, my friend, and completely understand. Yeah, I also want to touch, I mean, obviously being a small bank, right? There's some layers in the banking world that are just different than IMBs have to deal with, especially a small bank. There's some really restrictions in some cases of how big you could grow mortgage. For our IMB friends on the phone, could you explain a little bit about why banking regulators may have an issue with the mortgage division being kind of bigger than the bank in some cases?
Sure. And Rob, feel free to if I say something wrong or add here. There are advantages and disadvantages to a bank run mortgage manufacturing shop versus an IMB. Within the community bank, well, any bank, you have asset classes, right? So your regulator is, if you're a $10 million bank, $100 million bank, $100 billion bank, doesn't really matter. Your regulator is going to have some influence over where you allocate your assets, right? And in the banking world, an asset is a loan, right? If I make a commercial loan, that's an asset. It's a little different than most people think. I think, I'm going to say this respectfully, my perception is the banking regulators, there's no upside to embracing fintech technology or embracing a company that is really good at one thing. That there is comfort in the banking community through what's the word I'm trying to say, through diversifying your asset classes, right? And so as part of that, you have Rob, is it I know CECL is where you put reserves, but do you know what the reg or the rule is on where whether you allocate what percentage of your book is consumer loans, commercial loans, construction loans, loans held for sale, loans held for investment? You know what reg that is?
I don't, but I think everybody on the call knows exactly what you're talking about.
So
Basel 3.
well, yeah, Basil. So at the end of the day, your regulator doesn't love, maybe I'll say this plain English, they don't love a one-trick pony, right? So if you're a bank that is really, really mortgage centric, that's not great. If you're a bank that's really, really good at nothing but commercial, but not serving the community you're in, not great. If you're really, really good at credit cards, not great. Now, there's a lot of great companies that have carved out niches that way. But, my experience, with a larger organization and a larger regulatory environment and the smaller is not much different, right? It's about diversifying assets and the risk that again, this is my perception. My perception is the regulator, the auditor that's at your office, if you are a $100 million bank and you're making $100 million a year in loans, that regulator probably perceives that to be a systemic risk. In the real world, we don't carry that credit risk, right? We carry manufacturing risk. You've heard me say many times today, we're in the manufacturing business, right? I try to tell my bankers all the time, I'm not making credit decisions. I'm manufacturing loans. And I stress that point so that my folks here and my regulator realizes that if I manufacture $100 million worth of loans and I sell $100 million a loan, what am I on the line for? EPO, manufacturing, and manufacturing defects, fraud, misrepresentation. That's far different than making $100 million worth of portfolio loans. So navigating that regulatory environment is a challenge, whether it's a big organization or a small organization.
All right, Rob.
So-
I've been asking all the questions.
So Rob, you mentioned that putting together something from scratch takes a while or is somewhat difficult, but I forget the year that you said you and 14 other guys and gals got together and bought a bank. That's not easy to do either. How did you go about valuing that bank and the agreement that you've set up without, hopefully without asking for any secrets?
Yep.
Is it easy for people to come and go out of that agreement? Have you had anybody leave the agreement or be added to the ownership since?
Gotcha. So let me unpack that a little bit. Acquiring an FI, financial institution, is you're right, Rob. It's not a easy process, and wrong or right, most banks that are for sale are going to be state chartered banks, and the state regulator doesn't necessarily find a lot of value in mortgage centric community bank, right? So when you acquire a small institution, you submit a strategic plan, and there may be multiple entities that want to acquire that bank. So you'd like to think that whoever owns that bank, whether it's a family, publicly traded investment group, that they can look at the suitors and pick the one that's best. Now the question is what's best, right? I mean, if it's a small bank and the owner just wants to tap out and take his equity, that's one thing. If it's a family or a group of people that want to take care of their associates and the people that worked hard for them, then you come to agreements with that. So that's kind of the buying of it. Is I once heard Mr. Ayers at First Bank said, banks aren't, what do you say? Banks aren't sold, they're bought. No, banks aren't bought.
So
They're not bought. They're sold. So in other words, it doesn't matter who wants to buy you. It's a seller's market, right? Now, the downside or the challenge is the regulator doesn't just let anybody buy a bank. So, and quite frankly, even though I've been in the mortgage business for 30 years and worked for a bank, I'm not even close to be qualified as a leader, as an executive officer within a true bank. I'm a mortgage guy. So, Rob, to buy a bank, if somebody guys out there saying, we want to buy a bank, a couple things you're going to have to do. You're going to have to find a CEO that knows banking and is qualified and is going to, have to pass the approval of FDIC state charter. You're also going to have to, in many cases, when a bank changes ownership, the regulator is going to look for an opportunity to upgrade compliance and upgrade technology and things of that nature. So you're going to have to make an investment. Also, Rob, and I don't know what each state requirement is, but let's just say hypothetically there's a small little bank, and let's call it a $10 million asset bank. And a $10 million asset bank probably has, owner capital of, call it $1 million to $2 million, right? So, I mean, wow, you could buy a bank for $1 million. That's pretty good. No, not really. Most states have a minimum capitalization requirement. So even though you can buy this tiny little bank, you still have to raise sufficient capital to support growth. And the reason they do that is because you really can't take that little tiny bank and just stack a big mortgage company on top of it, right? You have to be a viable community bank. Our business model is very clear in that we are growing bank and mortgage together, and we're trying not to. We are sharing resources everywhere we can to maintain, a lower cost structure. So it's an undertaking. It's not easy, and it's a long-term investment. So Rob, you asked, do people get in and out? There is a market for privately held banks. There's a and there's a market for everything. But for the most part, it is a, I shouldn't say pointedly here because he works at First Bank, but if Michael wanted to invest in a local bank, then we'll probably have another raise in a couple of years, and that will be an opportunity. Or there may be an owner in the group that, for whatever reason, may want to sell, and then it's just truly a private sale. Now, value, your guess is as good as mine. That's
Are you servicing loans?
we have a very, very small portfolio of whole loans now that we've effectively run the bank for about 18 months, 24 months. And we probably have a couple $1 million worth of portfolio loans. And we had to divest ourselves of whatever technology they were on before and deploy Jack Henry. So we probably Jack Henry's smallest customer in the country, if I had to guess. So
They're having their conference right now, so if you're not down there, you're their
Yeah.
smallest.
they didn't invite me.
I love it.
Well, that's a, hope springs eternal. I'm glad that, and not that you're not special, but there are other companies out there that have sprung up. And, you see a lot of hand wringing in this industry right now. A lot of people just kind of wondering about, if we're going to sit at these interest rate environment, if we're going to sit in this environment for the rest of the year, what's our bottom line going to look like? And we're going to cut our way to prosperity. But there are companies that are doing well, and there are companies that have formed in the last year or two or three, which are doing well. And so it's nice to see. So hats off to you. Congratulations.
Thank you, Rob. I will say in that light, Rob, what is kind of fun about, being old, starting over again is, I think about what we did a long, long time ago, and now you can, we're standing up in Compass, and there's what took us 3 years, in the early 2000s, we'll do in 3 months, just because, you have that knowledge. And then the other thing that I think is great about it is there's so many pieces of great technology out there that in 2020 and 2022 were really expensive. If you weren't doing First Bank volume, you couldn't play with that fintech, right? Now that fintech guy will talk to me. He'll take my phone call, even though I'm doing 10, 15 loans a month. So it is a great opportunity to leverage really, really good technology, even at a small scale. And my focus is, I got 2 primary focuses, right? Within these 4 walls, I want my people to be happy, have fun, be kind, be respectful, enjoy what they're doing, and put the customer. Find the fun. And then the other thing that's important is how to, the customer experience was not great, right? You get an email or you get a text to take an application, you get another email to sign documents, and it may or may not be from the same email. And you may get phone calls, you may get, it's just not a good cohesive experience for the consumer. And I'm trying to take the time and sit down and make sure every communication, every touch point is a good customer experience, so that when somebody goes through the process, they don't feel like they got a root canal, right? They feel like they were taken care of, and they understood the process. Even today, I look at, as I'm deploying technology and I'm looking at doc packages and email communications, I'm like, what I'm in the business, what does this say? I don't understand this. And how can you expect a consumer to understand it? So let's get rid of the legalese. Let's get rid of the, no disrespect, the tech talk. Let's just use plain English and navigate somebody through the loan process. So that's the fun part of it.
I love it. Rob, can I ask you a totally selfish question? Okay. So you have been you're on TMC's lender board. You've been a part of TMC for quite some time, both at, really large organizations like First Bank and at local bank now. As you've been a part of things over the years, what do you think has been the most, I guess, valuable part of TMC to you?
Melissa, so what TMC was formed, what?
We're
20
almost 11 years old. We'll be
Okay.
11 years old in May.
Yeah, I'm embarrassed to say I'm on the board. I should know that. So I will say this, when we were all young and, we were in the four walls of our little office in Birmingham, Alabama. And we thought we were pretty good at things, but we didn't really have a clue. Okay. And I got involved, with another collaborative and the MBA, and then of course now TMC. And I've often told people, if I had to give advice on what are the top 5 things you would do in your career, or how do you focus your career in the right direction? Hands down, one of the top, if not the top 5, would be to get involved in any industry you're in. Get out of your 4 walls, get out of your community, get out of your state, and find a peer group, find a co-op, find a collaborative, and learn from those people. And I mean, when we did that, when we kind of, stopped tripping over ourselves and got out, you learn so much. I think about the fact that this business, there's no trade secrets anymore. There's really no intellectual property. We're manufacturing a widget. It's all about execution. What makes us different than the next person? And if you want to learn how to execute, find somebody else that does it well and emulate it. And within the mortgage collaborative, you're going to find 200-300 lenders. You're going to find leaders within the company that think just like I think, and I'm an open book. I'm happy to share whatever you want. It's worth the price of admission, which is, not much, right? If you want my advice, it is what it is. But
Like my commentary.
When you have 200 people that all, join together and try to help each other, there's just power in it. And you can't help. I don't know a single person that hasn't been involved in TMC and said they didn't see value in it. And it doesn't matter, Lee and I sit here, it doesn't matter whether, you're manufacturing 10 loans a month or 200 loans a month. There are, what's the largest lender in TMC now? They're doing 10 billion?
Multi-billion, multi-channel. Yeah.
There you go. So, so you've got everything from multi-billion, multi-channel through, small little IMBs and small little banks. So I'm obviously I'm a big fan. You guys have been great to me in my career, and the 3 of us all together. I'm an advocate. I'm an ambassador. If anybody has any questions, you call me, and I'm happy to tell you anything you want to know.
Well, I have one more serious question for us before we leave. And it actually came from our comments in our chat. So this is very serious. You got to put your serious hat.
This is probably a friend of mine who's about to make fun of me, but go ahead.
Everybody wants to know what's in your cup.
So, all right, so I'll end on this note. So find the fun. So on, even though we're a bank, we have this tiny little office. It's like a little house office, and I have a little deck on the back. And on Fridays, we find somebody's birthday. I don't care. If I got to go down the street and find somebody who tells me his birthday, I'll drag them in and we'll grill out. And we have, we have beers, burgers, and we literally take a break for a couple hours on Friday and enjoy life. And I think that's a important part of this. So you can use your powers of interpretation to determine what is in my blue solo cup.
I think Melissa's inspired to get a tattoo. Find the fun.
There you go.
Yeah, I don't know about a tattoo, but I do love the phrase. I love it. Also, there's questions in the chat about if you're hiring. So I think people want to come and have fun with you.
Amen. Come on. Although I need people that can make loans.
Okay.
Find the funds.
Find the funds, right? Yeah, exactly.
All right. Well, thank you guys so much for joining us. Thank you, Rob, for bringing your special guest. And I appreciate spending some time with Lee always, and meeting Michael. And everybody else, thanks for joining us today. Happy Friday, and we will see you again next week.
Sounds good. Thank you, guys.
Melissa, good seeing you guys. Thanks,
too.
thanks for
couple
accommodating
weeks.
the change of pace here.
Yeah, of course. Thanks for joining us.